Good morning, YouTubers, stock Twitters. This is Bagadon, a stock market caddy, and you are looking at the S&P 500 futures contract on a Renko chart. A little different, right? Let me introduce myself. I'm Bagadon at stockmarketcaddy.com. Today is Tuesday, August 16th at 10:53. And lots of confusion, lots of indecision today about what the market is doing. Are we in a new bull market going to new highs and new highs and new highs? Are we going to pull back? Are we going to crash? Well, one of the charts that we love to look at is called a Renko chart, a Renko. And you can see these little red squares. And one of the nice things about a Renko chart is you get to see the price action. It is not time dependent. So it's very pure and it's wonderful for us to write programs off of. But let's just do a little old-fashioned price analysis as to where we've been, where we are, and where we might be going. And we're going to look back just 6 months. We're currently trading S&P futures at 42.87. The brick size is 17 points. And you might be asking, and rightfully so, well, how do you decide, Bagger, on what size the bricks should be? And it's a very important consideration when you're trading Renkos. Make the bricks too big, you don't get to see what you need to see. Make them too small, and they become too noisy. So it really hinges upon what style of trading you're trying to do. What is the perspective you're trying to get? For that, we come to our creation called the SMC Brick, Box, or Range Bar Dynamic Calculator. And what you simply do here is come to your style of trading. If you are an intraday trader on the EES futures contract, based on historical and implied volatility, the brick size should be about $3.40, $3.50, and it automatically calculates how much each brick is worth. If you are trying to mimic, which we are, what the daily swing trader might be looking at, who's looking at candles or God knows what, the brick size should be about 17. And that's what we have here. The brick size is 17. So what we've seen over the last few weeks is this very sharp move right on up. Now this took days to play out, and our members were aware of this. We could see these are our little swing points. You can actually even see head, left shoulder, right shoulder. But we could see the support taking shape here, and then we ran up, hit little resistance, a little pullback. This is the C point of an ABC up. We run up, break through, pull back, hold, pull up, pull back, hold, little pullback, C point. These are little buy points. Buy, 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 and buy. Leverage, leverage, leverage. So let me point out a couple of things about where we are and what we think is to come. First thing, 1, 2, 3, 4, 5, 6, 7. Very, very unusual. Usually when we get to a 6 count, not just on Renko, but on any chart, 6 swing points, we can say, without looking at a stochastic or a MACD or any of that traditional nonsense, we can say that that market is extended and likely to pull back. And that's what we would expect. At minimum, from here, we would expect the pullback to be in this area, and then more than likely into this area, 40.98. Now, depending upon how far and how fast we come down, it will release more information to us as to what might come next. What we're looking for to get really bearish on this move up, and we think ultimately these lower prices will get taken out, we're going to look for some sort of structure that comes down, throws back, doesn't break out, and gives us what? A C point down, just as these C points, right? And over here as well. Now what I'm going to do is I want to give this some perspective, let me show you let's see, I'm going to pinch this down, deliberately making it small so that we can get an idea of from whence we came. This is the all-time high in the S&P, up here at about 46.24. So let's do this together. Let's go to a Fibonacci. For those of you that like Fibonacci's, and they're okay, but they do give us a perspective. We capture the obvious high in the last several months, if not all-time high, to the obvious low down here, which was back in late June was the early low. The move off was in early July. And what do we know? This is that entire corrective move, that big, down slide. We know that most times markets will pull up or back on a move about 50%. That would be right here at 41.29. And we did pause there for a little bit, and then we blew through it. Now we are at, and let me highlight this, and I'll color her magenta so that you can see it. And let's make it a little thicker. This is the 618 retracement, 42.46. Going to be pretty important to hold that. We don't think it will hold. We don't. We think we'll be right back down. But that's all we've done. We have just bounced, given a little short squeeze. This is why you don't want to short in the hole. Nobody sold up here except us. And then all the retail crowd, all the amateurs got really lathered up and got short in the market in what we call in the hole. And they are now being blown out. Once they get cleaned out, somewhere's up in here, the market will make another turn again, and we will begin to get back underneath these what were resistance points, and they'll come back and get tested and most likely broken. And most likely come September or October, you can come back and save this video or watch this. We will probably be breaking out. It's entirely possible that this might be the A, this might be the B, and we very well might be forming the C point of a major monthly A, B, C to D leg down. How many points might we come down? Well, what is this length? 46.22 minus basically 36. So in round numbers, you can do it right down to the math. 46.34 to 36. That's 1,000, if my math is correct, 1,000 S&P points. So if we do decide to come back down, when we turn from up here, we could be down actually it's more than that, right? Excuse me. No, I'm sorry, we had it right. So used to the calculator. Easy math. We could be down, if we were to turn from here, as we come down, a good target price would be around 3,100, 3,200 over the next few months, completing this move down. And nobody except us is going to want to buy down there. And we will most likely be buying in this short-term bear market. Will probably pause. I'm Bagged On at StockMarketCaddy.com. We hope you've enjoyed this little 10-minute review. We are mechanical robotic traders, but we do understand candles, we do understand technical analysis, we do understand tracking price. And in the end, it's all about price. Volume doesn't matter to us. Profile charts don't matter. Momentum matters because momentum or lack of momentum many times can signify a change of direction. And if you look at your candles today, you'll see what we believe to be taking shape is a high closed doji. Indecision at the high. And this run that started from our computers on July 13th is most likely coming to an end. Good luck, everybody.